going to start out with speed round. So what the speed round is, I'm going to bring up a subject. You're going to have a selection of something. You have to select something, one thing. Can't be two things. It has to be only one thing. And you have 30 seconds to state your rationale as to why you selected that. Okay. So the first area is payment growth. More or less than 2 times general economic growth rate. And we will start with Brian.
So I'm going to go with 2 times the economic growth rate. And the reason around that is, as we look at how payments have just, continued to emerge and become part of our everyday life, and we're looking at how does it become part of, embedded with us, how does it become part of our connectivity tissue, and there's so much out there to be able to drive through electronifications, and businesses are looking at, payments are another source of revenue for them.
Next is Brooke.
I'm going to go with more, but for the same reason. We're definitely in a digitization move, moving away from checks, moving to embedded financial payments. But I think we're going to grow a lot faster than 2 times.
Paul, you're up next.
Jump on the bandwagon, I guess. I'm going to go with more too, but just a slightly different twist. I think it's kind of an evolution of behaviors. Speed is important, and it's not speed of getting paid necessarily, but speed of acting, transacting, behaving. That's been picking up, and I think that's going to drive that increased volume.
All right, Philip, you're rounding it up.
I would also go with 2 times, more than 2 times economic growth. Mainly, I guess I'm on the same opinion as Brooke, that the payments are so digitized. The finance technology is rapidly evolving, so I would assume the payments are outpacing the traditional growth.
All right, next one is fraud. Is the issue more with technology or human element? And we'll go back to Brian on the end.
So I'm going to go with human element on this one. And while technology, in my view, offers the gateway and provides some of the accessibility for it to happen, I do think a lot of fraud comes down to the human element to it from that standpoint.
Brooke?
Yeah, I agree. I think it's mostly around the human element, but you're going to use technology to mitigate that risk and move away from having areas of situations where humans can make those changes. The more it gets put into a workflow, the more it's automated, the more we move away from that risk that's built into the system.
And Paul?
This just urge to take the flip side. So I was going to say human. I just want to be clear, but I'm going to say technology. And I'm going to say technology because it still hasn't been stitched together across end to end on products and behaviors the way it could be and the way it could protect against poor human behavior.
And Philip?
Yeah, I would also say human is the weak element in that chain, mainly because if you see how social engineering works, how professional they are in the meantime to steal your credentials to data. And I think the awareness is quite high for people working in that environment, but not that high that everyone would easily discover a potential fraud in terms of social engineering.
All right, I like the diversity in thoughts. Next area is API for embedded payments. When will it become dominant? Now, 2 years, 5 years, 10 years, 10 to 15 years, or never? Brian, you're up first.
As far as APIs with the embedded payments, I do think it's now. And for those payments to work effectively, real-time messaging away from the batch, I really think the API is there now for embedded payments. Now, is everyone there for embedded payments? No, but I think API is there for it.
Brooke?
I wish it was now. I don't think it is. I was reading an article that was saying about 30% of banks are ready with APIs, 30% might be ready in the next 5 years, and 30% have barely thought about them. So I'm going to say 5 years. I think it's going to take time for companies to move away from legacy technology. And even if they move a lot of their volume and a lot of their business away from legacy programs into APIs, it's going to take a while to sweep up 100%.
Paul?
Yeah, I'm going to agree with Brooke here. I think it's 5 years. It's the question is if it's when it's going to be dominant, and there's a transition period, right? And look at like checks and moving to electronic payments, right? Like when were we thinking checks were going to be completely out, and they're not, and it's going to take a long time. So I think it has quickened in terms of the pace of innovation. So I do think about 5 years is when we will be saying the API embedded payments are dominant.
And Philip?
Yeah, but also so minimum 5 years from the experience we have made in terms of bank connectivity. That's a huge buzzword. So everyone wants to jump on that train. But if you realize how non-standardized that whole environment is, it's still difficult that really the adoption rate is so high. So I would say minimum 5 years, if not longer.
Alrighty, we got one left in the speed round. It's payment efficiencies. Which matters more, speed or information? And we'll start with Brian.
So I'm going to take it from a view, because I think it matters if you're talking about from a consumer or from a business perspective. So I'm going to take it a little bit from a business perspective, and I'm going to go with information matters.
Alrighty, Brooke.
I'm going to go with speed.
Alrighty,
Info.
and Philip.
Speed.
All right, we've got a couple more to answer in this area. Information or cost, Brian?
Information.
Brooke?
Information.
Information.
Philip?
Agreed.
Oh, that was unanimous. Cost or visibility, Brian?
Visibility.
Visibility.
Which is also information. Yes, visibility.
You're right. I agree. Visibility.
Last one, flexibility or cost?
I'm going to go with cost, because eventually that's going to come into the equation.
I am still going to go with flexibility because it get leverage to drive down the costs.
We'll do flexibility as well.
Also flexibility, because if you're not flexible, then it might cost you much higher at the end.
Outstanding. Well, that's the end of the first speed round. We will have more. We're going to now go into a little bit more in-depth discussion. The area we're going to focus on now is foreign currency and globalization. The ongoing activities of companies with FX, global payments, and regulatory requirements is increasing in complexity. So when we think about foreign currency exposures, what are the key considerations that treasurers should take into account when deciding how to manage foreign currency and cross-border transactions? And this one, we're going to start with Brooke.
And I will impart to you the wisdom from Mastercard's own treasury team, who I talked to for this answer. So it's very long. I will try to summarize. They had a lot to say. So they said there were three things that when you want to manage the FX that you need to take into account. So the types of products offered, the portfolio of the currency that you maintain, and the FX risk that they carry. So if you're looking at your daily treasury P&L screening, you want to make sure you're adjusting that in a timely manner and avoiding overpricing or underestimating the risk. Sure, probably some of this is very intuitive, but I think it's still things that are important to be said and be refreshed on an ongoing basis. The FX remeasurement risk, so you want to target limited exposure. It's almost impossible to target no exposure whatsoever, so you want to find the way to moderate and make that exposure as limited as possible. As payments move towards instant delivery, it's imperative for treasurers to have a robust forecasting process. I think we're looking at, everything we talked about around speed and transparency and visibility is going to really lend itself to having that really intense, robust forecasting process and be able to move that into more of a real-time situation rather than a time-bound forecasting. And then the potential to net off exposures as much as possible. So the larger the volume of inflows and outflows that you have in a particular currency, that provides you a larger competitive advantage, not just in FX risk management, but it also will help you with liquidity and cash management. And then clearly need up-to-date treasury system. So I think this is always the challenge, right, is how do you, as treasurers, convince the company that it's worth the time and the effort and the money to update all the treasury systems and move into the API, the AI, the cloud-native platforms. But really, it's important in the long run. There's an upfront cost to it, clearly, but in the long run, it leads to lower cost, faster decision-making, and more actionable forecasting.
And Paul?
I mean, how much more can you add to that? It's like the textbook answer, right?
That was pretty robust.
I think you open Treasury 101 and then that's the full example. I mean, the only thing I'll add to that, and it's really not adding much because you basically said everything, is you do that through, data, right? And had data availability. And two, investment, which is hard, right? For a treasury team, I mean, think about your organizations, you're all fighting for technology resources, right? Everyone, every type of organization, banks, everybody. Technology resources are just the resources you need to do things. And treasury has to make the case to say, here's the business case for me investing in some sort of API connection and having a couple developers code to their APIs. So they have to make that case before they can even have table stakes information to get to exactly what Brooke was saying and being able to manage your business with the appropriate data.
Alrighty, Philip?
Yeah, I think in the ethics area, it's mainly also what we also need to consider is the data analytics. So what you can do with historic information to make profound key decisions to really hedge correctly, etc. I think that's crucial, and this is also something the TMS or the treasury teams need to think about. How do they get to the right information so that they can take the right decisions? So this is my answer is more a bit into the data analytics and how to make sure that the data is there to really take the right decision.
And Brian.
Yeah, no, I think they've said it all very well. I think it's looking at, how do you have that visibility? How are you able to minimize that stranded cash? How are you able to speed up your cash application when you're thinking about the countries that you're going in? All right, how are you billing? How are you invoicing? Is it local currency, USD? Do you have the analytics to be able to decide which way you want to do that? Do you have that right structure to be able to pull things up? Can you pull things up based on the country regulations? So I think ditto to everything they said here. So no shortage of things to think about and work through, particularly whether you're already international or looking to expand international.
Well, that leads us right into the regulatory requirements, expanding regulatory requirements, KYC, OFAC, FBAR, PCI DSS, introduction of BOI, which is coming up here real soon, increased demands on resources and costs to organizations. What best practices do you recommend companies deploy to efficiently manage compliance of regulatory requirements? And Brooke?
I think we need to approach regulatory compliance the same way you approach any other project within a company. So making sure you're out ahead of it, you know what's coming down the pipe. And not only is the Treasury team prepared for it, but the company as a whole is prepared for it. That they're aware of what's happening, they're aware of the effects it might have, and they're aware of what is needed to put the compliance in place. So you spend time assessing the effect of it, partnering with your IT team early. That I cannot stress enough. I think some of our IT teams have limitations on, resources, what they can do, how far they can do it, and then it's always fighting for space and a release. And so ensuring that they are aware ahead of time as much as possible and can plan for it with you as a partner. And then having a great project manager. I can't stress this enough. At Mastercard, we spend a lot of time working with our bank partners as well as end corporates and having project managers for any kind of significant activity. And they're worth their weight in gold, right? So they keep everybody on track, on time, on schedule, and link all the parties together. So bringing those things together and treating it as any other major project, though with a little bit more urgency, I think is the way you want to manage it.
And Paul?
Yeah, I mean, I'll add, start early. Start as early as possible. Don't delay. It's easy to look at some increased regulatory requirements that have been delayed and say, I expect everything to be delayed. So I'm going to hedge, take that bet, but don't do that. And lean on the experts. Bring the experts into the room, have conversations with them, look across who are the other experts. From a banking perspective, we act as your advisor. So use your banks. Use the wealth of information they have on regulatory changes to advise you and understand what you have to do and what you need to change in your organization to make sure you're compliant with the continuing heightened expectations across the world.
Philip?
Yeah, if you look at it from a corporate perspective, I think you need to think of whether you want to do all these regulatory requirements, if you want to fulfill them by your own, or if you want to work together with a third party. I'm talking mainly about the sanction screening, for example. If you do payments, we see what happens in the world. The OFAC list and all the other lists that are available on the market in the world, they're updating very frequently. And you need to make sure that you are up to date as well as a corporate. So I think overall it's a kind of a consideration whether you want to do this by your own as a corporate or work with a treasury aggregator or something like that, which can help you to overcome that complexity just to make sure that you're really up to date with all the regulatory requirements.
And Brian?
Yeah, and just to add in around with the starting early and understanding all the different environments. One of the things I want to mention around is your supply chain, or where you have different operations, where you're sourcing, and companies can hedge against many things. They can hedge against FX, interest rate, commodity, many different risks they can hedge against. The one thing they can't hedge against is political risk. So as your companies are looking at, hey, where in our supply chain, where do we want to source this from? And as they're maybe looking at a different jurisdiction, different country, you got to have that seat at the table early to be that influencer so you understand all the different aspects that we talked about when it comes to managing your cash, managing your capital from that perspective.
These are valuable comments, especially around regulatory requirements. It's something that you can't avoid, you can't ignore. So getting on top of it right away is really important. The next area I want to talk about is security, systems, AI, networks, etc. Fraud around payments grows in sophistication, and treasurers are at the front lines as a superintendent of payment security. You think about the criminal playbook. The criminal's playbook continues to expand with system-level fraud, social engineering, cyber theft, and ransomware in their toolbox. What can treasurers do to effectively combat fraud over time? And I'm going to start with Brian on this one.
Okay, great. And we talked a little bit about in the speed round with fraud as the technology, as the human element, and we all recognize there's a whole big piece of the human element in there. You're really only as strong as your weakest employee. Maybe another stand is you have to be right 100% of the time. The criminal only needs to be right once from that standpoint. And so as you look at what are you doing within your systems, within your staff, if you're a small company, so you only have maybe one or two people, or you're a larger company where you have multiple hands in the pot, it is critically important to have an ongoing training, education, awareness plan. If you're not testing your employees, find out and figure out how do you test them from that standpoint, and do it recurring. And one of the things I want to mention, and we saw this happen a lot earlier this year with the market disruption back in March, and when we're sitting down, we're taking a test, or someone's asking us a question, like, oh, I would never do that. Oh, I know the right answer. But where you think about where the fraudster and where they're looking for you not be thinking clearly. They're thinking, they know us as humans want to naturally do the right thing. And so there's an urgency and there's a pressure. And we were getting calls from clients saying, hey, our vendors are calling us and saying, don't send my money here, send it here. And they're like, how can I quickly change it? And we had to talk to them and say, no, step back. Do you know that was your supplier calling you? Did you call back to your trusted contact? Do you know who your trusted contacts are? And it was just eye-opening. They're like, oh my gosh, I didn't even think that could have been a fraudster trying to step in and redirect my payments. So, as you think about not only the training and the education of your staff and of your employees, thinking about that master vendor list. Do you have strong, robust procedures around creating that and keeping that? It's a very disparate process. You could have procurement involved, you could have AP involved, you could have legal involved, you could have tax involved, you have all these different hands. It's all paper process. And when there's a change to be made, do you have a true authentic source of record in knowing who your vendors are? And whether that's a super strategic vendor or a tail-paced vendor, do you have consistencies around policies and practices to be able to onboard and vet that vendor? Because you think about where fraud's going to happen most. So if you've been paying Anderson Manufacturing for the last 10 years, one, thank you. But two, and nothing's gone wrong with the payment, things are fine. So fraud is going to come in when you're setting up a new vendor, so you don't have a relationship with that person or that company, and when there's a change to those payment instructions from that standpoint. And so as you think about your policies, your procedures, your controls on how are you going to manage that and overcome that to help reduce and minimize the risk for fraud from it. So certainly education of your staff, looking at your policies and procedures, are you able to adhere to them? And then certainly test.
Brooke?
I think that's all exactly right. You really need a layered strategy that starts with training, starts with employee awareness, that has checks and balances on the system, but then start to move into the technology layer, right? So how can I use the more sophisticated solutions that are coming out to better understand my supply chain? What are the changes? Where's the system of record that keeps track of all those vendors? And then using AI, that's, I think, where AI starts to really come into its own, is to go through and understand what's going on in the system and be able to flag anything that looks out of the ordinary.
And Paul?
Sure. And I'd add that it's good to look at it holistically, right? I mean, Brian, you made a lot of points that it's the human element and training and getting folks to behave in certain ways to make sure you're capturing fraud or you have the right policies and procedures in place. But you got to look at it holistically and think, there's only certain time or hours during the day. So it'd be great to call every single vendor every time. But the truth is you might not have that time. So you have to look across and see where can I automate in other spots? And that's the purpose of automation, and that's the purpose of things like embedded payments, for instance. Where can I find time saves so that I could actually spend the time where I should be spending time? And in a lot of cases, that's picking up the phone to someone calling them and confirming that their payment instructions are in fact correct. These are truly the high value things that treasury professionals should be working on to protect their own companies and protect their own their own money.
Sage words there. Philip?
Yeah, fraud is actually everywhere, I would say. I mean, there's this human element which I was talking about. There's this infrastructure part, this technical part. I think also something that needs to be considered is the user management. So who has access to which bank accounts? If you are a global company, then you have multiple accounts, you work with multiple banks. You might not even have to control who is accessing what can this person do in this specific bank account. You might even have still banks where there's like single signatory, so only one person can release a payment or initiate a payment, for example. That's a huge risk, I would say. So as a treasurer, you also need to consider that you have like some kind of a control structure in place, some kind of a governance to make sure that you know exactly which person has access to which bank accounts, and also what are like the measures if someone is leaving the company, for example, how quickly can we deactivate this access to that account just to make sure that really nothing happens. So that's a lot of awareness and phishing awareness as well. Of course, this is another part. I just recently got an email from my CEO asking me to initiate a payment for $1 million. Right? I mean, we all know this case, and no one really. I mean, it's a trap, of course. It's obvious, but there are still plenty of people which are not really 100% sure if this is really a fraud case or if it's real. So awareness, training. That's crucial.
Yeah, as the old saying goes, trust but verify. And that verification process, you have to do that, no doubt. All righty, I want to move on to security training. What security training do you recommend companies provide to employees, and should it be mandatory? And Brian, we'll start with you.
Sure. And I mentioned this a little bit. How do you have that right ongoing training? Is it a required training? And in my view, it should be a required training from that standpoint. Also, when you think about, all right, do simulation testing. Talk to your financial partners. They, most likely will be able to offer some way for you to come in and be able to do a simulation testing as far as our fraud happened. What do we do? Our ERP system has been hacked and frozen. What do we do? How do we act? You think about business continuity planning, and we think about, I can't get into the office. Here's my plan to go through, but also from a cyber perspective. So if you've had an issue where someone clicked on a link and then you're all of a sudden subject to that cyber, do you have those trainings to go through? Have you gone through those simulations? Is it part of your business continuity plan? And just from personally on our side, at our firm, training is required. You go through it all the time, but then they constantly test us. And if you fail, it becomes a compensation impact. And if you repeatedly fail, it could become an employment impact from that standpoint. And so it is not out of the realm to think, and helps send a message of, hey, this is how serious we are. And to go through, and we got Cyber Monday coming up here in 5 weeks, and all the links, and everyone wants to get this right sale, but there's a lot of opportunity to open yourself up and expose yourself to cyber through it, so that training, tying it to time, tying it to performance, and making a requirement is extremely important.
And Brooke?
Yeah, training needs to be mandatory for everybody and ongoing. So same as JPMorgan, we have constant training. We have phishing simulations all the time. And if you do fail too many of them, first you have to have a discussion with some very senior people at Mastercard, and you don't want that. And then after you fail a certain number within a period of time, it is an employment issue. And so being able to be aware of that, companies do a lot as well to be able to help employees recognize a legitimate email. So for example, every email that we get that's external has a bright yellow banner on the very top of it. It is ugly, but you notice it. And so, being able to just at a glance say, okay, well, the message of this seems like it's internal. They're asking me to do something internal, but that banner tells me it's external. So without even the training, you get to be in the zone of understanding what you should be looking at and what you shouldn't. But I think that is absolutely key for everybody at the company.
Paul?
I mean, this is an easy yes. Make it mandatory. It's helpful. It'll protect the business. We do the same. We do all the external emails with a really annoying big capital letters for us. And yep, you have a strongly worded conversation if you fail too many. So it's a good practice, and it works.
And Philip?
If you work for a bank, then it's obvious that you need to take these trainings on a daily, not on a daily basis, but almost. It feels like at least on a daily basis, but it's not on a daily basis. But if you're like a smaller company or a mid-sized company, then you might need to consider. Of course, it's a yes. it must be mandatory, absolutely. But sometimes smaller or mid-sized companies don't have the knowledge how to do that, right? So they also here they need to think about third-party providers. There are many third-party providers out there where you can customize the training for your employees. You can simulate phishing attacks, etc. So definitely worth to look into that if you don't have such something like this already available. So a clear yes, definitely.
Certainly those headers on the outside emails, they are annoying, but they are valuable and they do work. And people start paying attention to it after they've seen it enough. It's like, okay, I've seen this. This is not legit. It's from outside the company. It's not my CFO. It's not my treasurer. It's somebody else. So it's important to take those kinds of steps, even if it's annoying. Bright and yellow, big bold letters, whatever way it is. All righty, I'd like to move on to embedded payments. Treasury payments continue to evolve. Open Treasury, open payments. How will embedded Treasury payments unfold over time, and over what time frames? And this time we're going to start with Paul.
Great. So I'm fair warning. I'm a little bit of an embedded payments geek. So I love this topic. I think what's going to unfold is we've started to see it kind of work its way into a lot of companies and a lot of processes, which is great. But I think the next step now is maturity. Right? We're seeing some great solutions out there that have kind of run ahead of the industry. We've seen some good adoption, but now it's time to kind of take a step back with these solutions, button them up from a security perspective when they need to be buttoned up from a security perspective, button them up from a process and efficiency perspective, and then start to kind of build out that scale and integration in, across all the various systems. For us, it's I'd say from a banking perspective, and I've got this experience at other banks as well. It's been a really incredible learning experience for us over the last 5 to 10 years or so, let's say, to work our way back into your processes and procedures and where you start your day. I think for a lot of bankers, it was kind of a wake-up call years ago to say, wait, when you come in the morning, you don't necessarily log into the banking portal as your first step. You do other things. So now it's taking that learnings and taking all of the solutions we've been rolling out into the market, maturing them, building out adoption. And as we see that further scale in embedded payments, then it's about kind of what can you innovate further and what can you kind of do to make them just that much better and that much more contextual to help you run your businesses.
Thank you. Philip?
It's all about adoption, actually. I mean, there's this buzzword, embedded payments or API especially, which is, of course, in some kind of combination with embedded payments, is here for a while. I think in Europe, and probably you hear it, I'm from Europe, from Switzerland, so apologies for my accent. We have a regulation, PSD2, which is like forcing the banks to open up their data. So they open banking, as we call it. And so banks they need to offer API services to everyone, to fintechs and to the end clients as well. So the adoption rate is a bit higher there, but we are still missing is the standardization. So as we also see it when we try to do bank connectivity via API, it's not so easy. It's still, I mean, they offer it, it's here, but only for limited services, for a certain number of services, and most probably also for a limitation of the value for a payment. So I would say if we talk in terms of timeline, then adoption rate, I think 2 to 5 years. It's kind of the banks, of course, and the forward-thinking companies that are the higher adoption rate, and then 5 to 10 years are probably we see a wider adoption. And then, as the question, the speed round number 1, I was highlighting, it's probably 5 to 10 years where we then see a wider adoption and the real use cases where everyone thinks this is now the new normal and this is what we should use.
And Brian?
Yeah, and I think we're seeing that growth, and particularly the early adopters, and where APIs come in, and embedded banking is where you have those non-bank payment intermediaries or third-party payment processors, and it's all part of their services. Companies are looking at, all right, how do we make this become a recurring revenue model as well? So you'll look at different things around subscription models, and it's not the subscription model of when I was a kid and get my Dirt Rider magazine where I'd pay $10.95 a year and get my 12 subscriptions. It's, hey, how can we have that recurring revenue, recurring subscription? keep that engagement with my end, buyer and consumer from that standpoint, and to grow through. Agree with the points made here as well. It's just as you look at that adoption, how do you bring it in? How do you open it up? Have the right regulatory, have the right visibility to be able to drive that through, and essentially, payments disappear, and you're able to do it without having to think much. You think about if you can have that payment embedded into your processes and go through, you are much more likely for that sale to be, that transaction to be completed, as opposed to, the shopping cart rate abandonment. All right, I got everything in my cart. Oh, I got to go get my wallet. I got to get my credit card. I got to do this. And it's like, oh, this is too much. I really don't need those things. And we've seen it in our everyday lives now. You can one click buy, boom, and it's at your door the next day or sooner.
And Brooke?
That's exactly the point I was going to get to. There's so much we can learn from what we've seen on the consumer space. So in the consumer space, you're able to pay how you want to pay, embedded directly into the sales channel. And so it's not just, do I want to pay, with this card? Now you have more sophisticated ways to pay, especially with open banking, to say, do I want to use my bank account? Would I like to use a debit card? Do I want to use a credit card? So if you start to look at that and how that would affect the commercial space, and saying, okay, well, this procurement system is now a procure-to-pay solution. And this procure-to-pay solution gives me an opportunity to pay with a bank transfer. It gives me an opportunity to use a card. It embeds a virtual card in there. And maybe a working capital solution. So how do I embed supply chain financing or some other kind of working capital into that exact procurement process? And same on the receivable side. I don't think I'm going to get paid in time, so I'm going to sell this receivable right in the process. I think that's really where we want to go. And I think that's very much what we can learn from the consumer model and just determine how do we apply that into the commercial model.
Thank you. Next area within embedded payments, I want to talk about APIs. What is happening with API adoption? Do you consider this to be vaporware progress? Is it a step in the right direction? Or will it soon take over the space fully? And we'll go back to Paul.
So, is it vaporware? No. I think that's been clear. I mean, APIs it's just computers talking to computers. This has been going on for decades. It's the fact that we've externalized our APIs and allowed our APIs to talk to your systems, to talk to the other kind of areas across the kind of value chain of capabilities in treasury management. The earlier point you made actually was around standardization. That's the challenge, right? Every bank has launched its APIs. We put it into the market. Fintechs have launched their APIs. Standardization does not necessarily exist within financial institutions around APIs, which is going to challenge adoption. If I have 3 banks, they have 3 wildly different specs to get me my balance information. But it's achievable. You can overcome that. And I think the way a lot of us are progressing is kind of the system-to-system integration into doing it for you. So banks that are working to integrate to your ERP API so that you don't have to, or working to integrate into TMS solutions so that you don't have to. That's where we're going to see that wide adoption, and that's where we're going to see the scale. Because when we remove the painful technology implementation piece from the treasury management professionals' lives, that's when adoption of APIs and embedded banking solutions are going to be just that much quicker.
And Philip?
I think at the end, I look at it from a perspective that you were saying exactly. If computer talking to each other via API, that's a no-brainer that exists since decades. So that's nothing new. It's just like the concept, how it works and how you apply it to your specific business case. And as a corporate needs to become more mature. So their business case at the moment is rather simple. It's collecting account statement, for example, especially in the cash management area, sending payments. But there's much more actually you could provide via APIs. And as long as I think a corporate treasurer doesn't see a huge benefit of having these APIs all over the place, and also in terms of standardization, if they're not standardized at the moment, then it gets difficult. But once we are there, and it's definitely something which will be there in a few years, definitely, makes our lives easier. But I think it's just a question, what are the use cases behind the API? If it's just a connectivity, similar to what we have as a host-to-host, exchanging files, of course, more real-time, then okay, that's one use case, but what can be delivered on top from banks? And that needs to become more mature over time.
Yeah, no doubt. Brian?
And as we think about APIs, and Paul mentioned this, they've been around for decades. Now, while as banks we've been learning how to spell API the last few years, it has been around, and it's been pretty common as you look at those microservices and how do they have that, and just another way of connecting. I think some of the challenges, and as we look at the growth and where we need to really overcome as we look at the next 5 to 10 years, is how many of us are still with on-premise systems or using an AS400 for our AR system, and that's going to make it difficult to connect, or you're built around batch processes and everything's built around batch. And so that's going to be some of the barriers of like, all right, well, I can do host to host. I know this works. I'm in a manual process. But as you move into cloud, you move off that on-premise, as you get more into, all right, how can I leverage this full end-to-end transaction tracing and monitoring and real-time cash application reconciliation, APIs will continue to grow and help serve in that space.
Thank you. Brooke?
Yeah, I totally agree with everything everybody said. And also, it's going to take time, right? It's not an overnight process. There are a lot of legacy systems, so, it will, we may be able to move 50 or 75% over quickly, and then it's going to take some while to sweep up the rest. But if we want to move into a situation where we have, this real-time access to data to make faster decision-making, then this is the direction that we need to move in.
And can I add, just to give you a little context in terms of our thought process around APIs, I think most of the banks would agree, if you could wave a wand and make everything available via APIs, we all would. It'd be a no-brainer for us. But there's a few things that go into the equation just to think about. There's first the granularity in terms of the APIs you have within your internal systems and the documentation to make sure that if someone wants to connect to it, they actually know what they're trying to do. And then there's security. Right? You need an external gateway, a secure external gateway, authentication process, and you need a robust implementation procedure to make sure if you're going to connect to that API, that you are who you are and that it is a secure connection. And then you layer in one more piece that every bank is doing the whole prioritization and discussion around these APIs around what do my clients want the most? I think we can all agree that information balance and reporting is number one. That's easy. Everyone gets that. That should be our first API, but then what? Brian might think it's entitlements. I might think it's payments. Someone else might think it's something else, depending on their clients. And because we don't have a true standardization, everyone is taking different approaches to what APIs they're externalizing and delivering to clients. Sorry, just wanted to add that little.
No, thanks, Paul.
I told you I was
Appreciate that.
passionate about this topic.
You definitely are, and it shows. Thank you very much for the comments. We are going to move into the second speed round. Again, you have to pick one. You've got 30 seconds to state as to why you selected the selection you made. And we are going to talk about FedNow. FedNow launched in July. It's up and running. And so the first area here is, will they launch a request for payment function? And when? And we will start with Brian.
Okay. So they will launch a request for payment. And my rationale and reasoning for that is the clearinghouse with the real-time payment platform has done the same as well. When that will happen, I work for a bank. We can give a quarter. I'll never give you a year. As you look at our roadmap, it's on the roadmap from that standpoint. But I would see it here in the near future.
Brooke?
Mastercard's not commenting on FedNow.
Thank you. Paul?
I think they have to, yes. And I honestly couldn't tell you when.
And Philip?
I think so too. I think there's a growing demand for such real-time payments as well, and that just need to meet the user expectation.
Alrighty. Next area is by 2025 volume leader, number and value. Philip? No, excuse me. Brian.
I think they'll still be in second place to RTP by 2025. How much or what's your guess is as good as mine from that standpoint. My rationale and thinking behind that is, the clearinghouse has had real-time payments out since 2017. So they got a 5-6 year head start on them. And there still is, while it's intended for the smaller local banks, regional banks to be able to connect through the Fed and have that connectivity, there are still system updates that have to happen. Many banks are built around a batch processes. And I think about when we built real-time payments 6 years ago, there was like 70 downstream systems that we had to update to be able to work on a 24/7 by 365. From that standpoint, I know there's intermediaries and other players, but it's long-winded answer to say I think they'll start in second place by 2025.
Alrighty, Paul
Second place, 2025. Easy.
and Philip.
Agreed, second place.
All right, we're all talking about second place. Okay, Fed Now or same day ACH?
So I think same day ACH for majority of our clients, and for maybe many of you in corporates, or if you're in government municipalities, same day ACH provides of the speed that you need to be able to get it out and get it through. I think you have 3 different windows now to be able to hit and happen. And so as you're thinking about a majority of our use cases, I still think same day ACH is an effective, faster payment rail for many of our clients. The other aspect, when you come over to Fed Now or real time payments, and thinking about, all right, if you're in a heavy consumer industry, maybe you're doing some digital payouts, things of that nature, it's certainly important. But I think same day ACH is still an effective option out there for clients who need to get money out today, just not right now.
And Paul?
For now, same day ACH. You have a process, it works. You use same day ACH. Until there's a real reason to move off of it, same day ACH does the trick.
And Philip?
I also agree here. I think it needs a bit more time until FedNow takes over the lead.
Alrighty, we're going to move on to efficiency, automation, E to E to E to E, APIs. Payment efficiency matters, and the demands on treasury teams have increased. First area will be around treasury automation. Is automation of payments, access to bank accounts, and consolidated reporting through a TMS enough? What other steps towards automation should a treasurer take? And we're going to start with Philip on this one.
Yeah, it's definitely the right step into the right direction. The only thing is, at the end, TMS is a system and it needs data, so it cannot be isolated. So what you'll need to consider when implementing or evaluating a TMS is how does the TMS connect with each other systems you have, for example, an ERP or other backend system, for example, and how does the TMS talking to the banks, for example. Bank connectivity is mainly not something which is a core competence of a TMS. Apologies for everyone providing TMS in this room. So it's of course a must-have. Otherwise, you don't get the information in your TMS, and you must have information in your TMS, whether this is coming from banks, account statements, whether you send the payments to the banks, whether this is coming from an ERP or any other backend system. And I think TMS also, what is also important to consider is how do you set up connectivity between the TMS and the bank. There are plenty of options available on the market, whether this is a host-to-host, whether this is an API in the future. When we go into the Europe, for example, we have IBIX in place. So if you're a company working globally, then this is an additional way of connecting to a bank, or whether this is SWIFT, for example. So all these kind of different combinations is a certain complexity. So also here you need to think of, is my TMS doing everything I want? Does it offer the full functionality? Or do I need to work with other third-party providers on top of my TMS to make sure that I have an efficient treasury automation in place?
Brian?
And I think it's important that, as you have a TMS, you have an ERP, how are they all connected through? You don't want to be building in a silo and saying, oh, we do everything over here, and then it needs to be pulled out, and then you're over in another system going through. So how do you have that information connected between the two? As you think about, what are you doing with that information? Okay, I'm getting all this information in, but how is that helping driving your decisions? How is that helping you influence across your IT, your procurement, your sales, and finance organization, with that information? As you think about, forecasting, and when are we going to need cash? How long are we going to need to borrow? How long can we invest? And to be able to have that connectivity, and as you're taking in that, it's one thing to be great. All right, awesome. We're getting APIs. We're getting real-time treasury. We're getting things as soon as they happen. But what are you doing with it? And then how are you able to drive efficiencies? And as you look at time that's being freed up by your staff, it's not always a employee reduction type thing when you bring in efficiencies. It's like, oh, we now have time for them to focus on and do this other part of their job that they're not able able to get to? And as you think about the analytics, and how are you going to really leverage and utilize that data, within your business and organization?
And Brooke?
Yeah, I totally agree with Brian and Philip. I think that, the TMS system is only one element of this. We need to make sure that all the pieces are talking together, that they're going to real-time data, and that you have the ability to analyze that data, to forecast off of it, and then deliver actionable insights.
And Paul?
Sure. So another thing I'm a geek about is product management, and your product managers. Your product is treasury, right? So like good product managers, the approach is to go end to end, to understand your end-to-end process. And I think that point was made earlier several times. And where you can automate, and then prioritization, where you should spend your time on building that automation. It's a good product management exercise. It's a good product management approach. You have a roadmap, you have items you want to automate across your processes, automate across your processes to build a more effective product, which is your treasury product. You should also look to those third parties like TMS, like your bank, like your ERP, to say, what are you doing to automate for me? Because you use those systems of those institutions, they should be delivering automation on your behalf to help improve your processes, and you can bake that into your roadmap and your expected improvements in your processes.
Well, thanks for those comments. Certainly, the automation drives you towards the efficiencies, which is where you want to get to. And when we think about another area in this arena about efficacy, data, information, visibility, reconciliation. We got payment data. Being able to have access to payment data is vital to treasury teams. Does having a TMS automatically solve the treasury's ability to access payment data? And what else should be considered? And we will go back to Philip.
I think TMS alone cannot solve all the challenges in that regards, but of course it's a piece of a puzzle that matches up. So as well here, I think the interaction is crucial between all the systems, because it's not only the TMS that is generating payments, I guess, you also have AP payments from ERP, for example, or you have other urgent payments that you, initiate via bank portals directly or via TMS or an ERP. So at the end, it's just important that you have all these information together at one place. So make sure, or think about the data warehouse, for example. Make sure that you unify the data so they speak all the same language. You can place that information into a data warehouse. Data mapping is crucial, data governance. So make sure that you have these data placed on a folder where everyone knows exactly what is the content of this data, and control that. So make quality checks that the data is there, because once you have this basis and you have all the data that you need from a payment perspective, then you can work with this data. You can put up like data analytics, some kind of a forecasting. So that really is helping the whole organization out of treasury. If you can predict what is going to happen, or if you can make better predictions or forecastings, etc. So I think here it's really not only the payment, but it's the data within the payment, and how do you work and where do you save that data, in which format. That's a crucial part, I would say.
Yeah, it definitely is. Brian?
And certainly it's a tool in your toolkit. But how are you going to use it? And Philip made some great points as you think about the data, and are you setting the right business rules? Do you have the right parameters? And how is that when you're looking to connect into maybe your invoicing system or your vendor system or your client policy systems or where have you? If you need to have standardization around your data, how you're classifying what's critical, what's traveling, are you able to get that information in? So that way you can then go through and apply the right analytics. You have the right ways to be able to mine the data. You're able to have faster cash applications, reconciliations, all those different aspects coming through. But it comes down with having the TMS is certainly a tool that allows you to help do it, but you got to have the right data structures around it.
And Brooke?
Yeah, I think that once you have the data, being able to have it in a platform that allows you to analyze the data, to develop insights off of it. So that's probably maybe not your TMS. There might be other solutions out there that you might want to look into that will do a better job of analyzing that data and pulling out, okay, well, in this kind of module, I'm looking at supply chain finance, I'm looking at ESG. I'm really looking from end to end across all my types of data to come up with what you should be doing and real actionable insights that you can then pursue.
And Paul?
There's not what everybody said, I would agree on. And the only thing I'll add to that is that there's always remember the human element, And we can't forget that. Any system or any process that automates everything, it's great and it helps. Absolutely helps. But there's a human element to it too. I might have the best cash flow forecasting, but if the data within my TMS does not know that I'm buying a giant piece of equipment in 3 months, it doesn't do anything. So whatever process or system you have, you need to make sure it layers in the ability for the human to manipulate it and to change it based on reality, based on what they know, based on their experience, because you are still the experts. So as great as the data could be, as great as the algorithm might be, Gen AI is not quite there, and you are still the experts who are going to drive what is the right decision and what might actually happen.
I think these are great comments. You have the ability to get access to data to provide visibility. Certainly when you're forecasting, the old adage I used to use back in the day when I was a young analyst, garbage in, garbage out. So you want to make sure the quality of the data is there and the ability to access it. So it gives you that visibility that you need. So when we think about everything we talked about today and strategy around, as a tool, a differentiator, something to leverage, think about your company strategy, the payment strategy, the things that you can do to position yourself as a treasurer around this arena. What are the one thing that stood out for each of you in terms of what we either talked about here as a panel or something that, is not been covered, but you want to make sure the audience has a chance to hear. And we're going to start with Brian on this one.
Okay, and it's going to be the theme that you've been hearing about, all morning, the embedded payments. And from that standpoint, I really think, the last decade we've been focused around, building the platforms, connecting people to each other. And this next decade is, all right, how are we going to be connecting those platforms? And we view payments as really that connectivity tissue between those platforms. And it's just going to become further and further, an everyday part of our life, embedded in there. We're going to see tremendous growth, over the next, 5 to 10 years on that front. So looking forward to seeing it. It's a little bit scary as well, how easy it can be to do some things. But I do think what the themes we're probably hearing throughout the conference, what we've been talking about here today, just the future and where we're driving to have those payments essentially disappear and become embedded are going to be a big thing.
And Brooke?
Yeah, I think what we need to do as a payments industry is help the treasurers and the CFOs make the case of why you need these tools, why you need AI, why you need APIs, why you need these types of connections, so they can see that it drives ergonomics, it drives economics, right? It's a value to the entire company. And as we're moving in that direction and we're helping you make that case, I think that will go a long way into, them seeing the need to invest in this space. I think AI, as it comes up, is going to be a key element of what we're going to see in terms of sophistication in solutions. But, it's going to take a while to get there.
And Paul?
Sure. So from an API, embedded banking, embedded payments perspective, I think it's a really exciting time because it's not nascent anymore. It's not what ifs. It's starting to happen, but there's still the ability to define where it's going to go. And from that perspective, it's fun because you don't necessarily have to be the first anymore. But you can still be an early adopter that drives where solutions are headed. You can still talk to your bank and inform what are they going to prioritize in terms of their APIs and their connectivity. So it's a great opportunity to really drive where the space is going. And I think what's exciting when we see things like AI and merging and everything, it's what we could do is learn from the API embedded banking space, embedded payment space that's now starting to mature a bit and start apply those lessons to now the newer technology, which is AI, because we just went through the process of something new happening, starting to mature, starting to get adoption. So it's kind of a fun time for best of both worlds of maturing solutions and now very, very new solutions.
And Philip?
Yeah, I fully agree. I think it's an interesting time in treasury. I think there's like the starting point of next level treasury when we talk about also technology, and technology is a big part of a treasurer's world, right? And with all the AIs and the ChatGPTs and all this kind of stuff and all these APIs, of course, coming up, I think also something that needs to be considered is the central bank digital currencies. I mean, we're not yet there, of course, that this is going to be introduced very quickly, but there's so many countries already looking at that concept of a CBDC. It will be some kind of a mindset change because the technology behind the central bank digital currency is something else. It's a blockchain, a distributed ledger technology. And I think very soon, in a few years, of course, we will see first countries launching its CBDCs. And then we just need to think about what is the impact of those to a treasurer. And there's many impacts, I would assume. I mean, it's some kind of disruptive to the traditional banking. You can reduce intermediaries. Apologies, there's so many bank representatives in the panels. But yeah, there's so many things to consider here as well. And I think we just need to, or Treasury is on the side note at the moment, you need to focus a little bit to keep up to date on the information on CBDCs.
Well, I want to thank our panel today for spending the time to answer all these questions. They sat in the hot seat, they survived, and I really appreciate them being here, as well as the audience members who came. So thank you again, and have a great day.